3M Company, stock ticker MMM, is currently trading at $105.24 per share. Over the past year, the company is down about 28.5%, and over the past 5 years, down 52%. And we can see in the summer of 2021, the company was trading at around $200 per share, but since then, they have about halved in their share price, around $100 per share. And it's no surprise this is a pretty popular company among dividend investors right now. It's pretty close to its 52-week low, and if we look at that dividend yield, it's sitting at around 5.65%, so a pretty high starting dividend yield. But look at this dividend history. They have been increasing the amount they pay in dividends for 64 consecutive years. And we look at the dividend growth, it's not a whole lot, but it is decent. You can see the 10-year compounded annual dividend growth rate, about 9.5%, 5-year around 4%. Not as much dividend increases lately, and I'll tell you why that is in just a little bit. But again, you can see why this is a popular company among dividend investors. Now, the big news surrounding this company is the lawsuit regarding the earplugs that they supplied to the US military. So I'm going to be giving you some updates. Let's go ahead and scroll down here, and we can see where things stand today. 3M has lost 10 of the 16 cases that have gone to trial so far, with a total of $265 million awarded to 13 plaintiffs to date. So $265 million, that's definitely a large amount, but you have to keep in mind 3M is a massive company. They currently have a market cap of over $58 billion. So while that is a large amount, that's really not enough to make me concerned, but I'll tell you why I am concerned. If we keep scrolling down, we can see 3M recently unveiled new data that shows 90% of a group of 175,000 plaintiffs have no hearing impairment under medically accepted standards, according to the U.S. Department of Defense records, but lead attorneys for the plaintiffs call this data a misrepresentation. 3M has purposely skewed this data by relying on hearing standards that do not measure frequencies most affected by noise, concealing the hearing damage suffered by veterans. So that's a huge concern. They're claiming 3M has skewed some of the data. And if we keep scrolling down a little bit further and look at more of this liability risk, we can see, according to a JP Morgan analyst, do the math on the number of plaintiffs, which is north of 200,000, and you take the average settlement value. The simple math on that gets you well north of 10 billion to 20 billion, according to JP Morgan analyst Steven Tusa. So that is a major concern for this company. Obviously, the 265 million, that's a large amount, but not enough to make me concerned. But now we're talking about numbers north of 10 billion or even potentially $20 billion. So you can see why there's been such a huge sell-off for this company for the last 1.5 years. So let's go ahead and jump into my stock valuation spreadsheet to see if we can find the intrinsic value of 3M. We'll be looking at a few different valuation models like always, but let's go ahead and jump over to our stock screener. If you'd like to be able to download this spreadsheet, you can head over to my Patreon page at the link in the description. We'll go ahead and come up here and plug in 3M and hit enter, and you can see all this data will automatically load in. Now, like we already mentioned, really nice starting dividend yield, and the payout ratio is sitting fairly close to 60%, so a little bit higher than I typically like to see it, but for a company that's been increasing dividends for 64 consecutive years, it's really not too much of a concern. You can see analysts currently have a target price of around $120 per share, institutional ownership not too high, sitting at around 68%, and a beta of 0.95, so you shouldn't see too much volatility compared to that of the market. Now, moving forward, let's go ahead and look at our first valuation, and the first one we'll look at is Graham's valuation. Now, you have to keep in mind with all these valuations that we're looking at, we're having to assume that this lawsuit is going to be very detrimental. We could be looking at around $10 billion. So that being said, we have to take that into consideration when applying our growth rate projection. So you can see in this scenario, I'm applying a growth rate projection of around 0. Maybe it'll be 1 if we're lucky, but either way, we're still coming to an intrinsic value far below the current trading price after plugging in all of these different variables. Now let's go ahead and jump over to our discounted cash flow analysis. And again, you can see I plugged in the historical free cash flows for this company so we can see our year-over-year growth rates. And they've done a decent job of growing their free cash flow year over year. It's an average growth rate of around 2%, so it's not too high, but this company has been around for a very long time. But moving forward, I'm sticking in line with a growth rate projection of around 2% for the future free cash flows for the company. So I applied it to that and the terminal value, which is the sum of the future free cash flows past the year 2030. I found the present value of those future free cash flows and added them together, added the company's cash and cash equivalents, and subtracted out the total debt to get their equity value. Once I had the equity value, I divided by shares outstanding it came to a discounted cash flow price per share of $102.40, which is pretty close to that current trading price as we can see right here. And again, because of this lawsuit, maybe some people would have projected higher free cash flow, maybe around 4 or even 5. And obviously that bumps up the intrinsic value quite a bit, but because of this lawsuit, I don't think it's wise to project anything higher than 2%. So again, intrinsic value of around $102.40. Now for the multiples valuation, we really don't have a whole lot of good comparables for 3M, especially when you could take into fact the lawsuit. There's obviously no other companies dealing with this large of a lawsuit that is anything like 3M. So this really just isn't a good valuation model in this scenario. So we're going to skip it and jump forward to our dividend discount model. And obviously, again, this is a company that's increased dividends for 64 consecutive years. So this valuation model carries a lot of weight. So I plugged in the quarterly dividends over the past few years so we can see how much they pay out each year. And the dividend growth has been pretty slow over the past few years. Obviously, I think, again, the lawsuit has something to do with that. We have dividend growth of 2%, less than 1%, less than 1, and again, less than 1. So that's an average growth rate of right at 1%. So moving forward, I'm projecting a dividend growth rate of 1%, discount rate of 8%, which gives us a dividend discount model price per share of around $86.57, a little bit lower than that current trading price. So when we jump over to our output tab, we can see our three valuations. We have grams at 83, discounted cash flow at 102, and dividend discount model at 86. And that gives us an intrinsic value of about $90.90 per share, lower than that current trading price. With a 10% margin of safety, you can see our acceptable buy price for this company is around $81.81. Now again, keep in mind when I perform these valuations, I took into consideration the massive risk that we are currently seeing with this lawsuit. Let's for a moment say that things turn out really well for this lawsuit. We could change our growth rate projections. Let's say we have a growth rate projection of 4. You can see intrinsic value jumps up to around 115. Discounted cash flow, let's say we project a free cash flow growth rate of 4 for that. Intrinsic value of 121. And with our dividend discount model, if everything goes better with the lawsuit, they'll have increased free cash flow, a decent payout ratio. I think they could increase their dividend growth to around 3%. And again, dividend discount model of 123.6 in that scenario. So you can see when we jump over to our output tab, our valuation completely changes when we don't take into consideration the current lawsuit. We come to an intrinsic value of around $120 per share. So with a 10% margin of safety, all of a sudden we are actually within our buy price. So this lawsuit is definitely something to keep an eye on. As of right now, it's really not looking too good for the company, which means I am not considering buying this company at its current prices, even though it's very close to its 52-week low. I think there's just too much risk there. If everything turns out well, this could be a nice flip. You could see some really nice share price appreciation if the lawsuit doesn't turn out to be as bad as it looks. But right now, I definitely would not recommend adding this stock. Maybe keep it on your watch list and keep watching the news with the lawsuit. But again, not currently planning on adding any shares. So there you go. There's an update on 3M stock. If you'd like to be able to download this spreadsheet, you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.